recent stock market crash has many people asking, what's next? There's no one answer to that question, but we can examine some possible consequences of this type of event. The stock market is always a cause for concern, but the entire economy can feel the effects when it crashes. From unemployment to the recession, there are a variety of ways in which a stock market crash can hurt the economy. So, what can we do to prepare for any mitigate this risk? Stay tuned for more insights into this critical topic. Hello everyone, welcome to Success Wisdom channel. If you are new to this channel, do like and subscribe to the channel. This video will discuss cause and effect. Stock market crash today, what's next? What caused the stock market crash today and what are the potential effects? While the stock market crash today was caused by various factors, the primary trigger appears to be the increasing tensions between the United States and China. The two nations have been locked in a trade war for months, with each side imposing tariffs on billions of dollars worth of goods. The conflict has rattled financial markets and caused businesses to rethink their supply chains. As a result, many experts believe that the trade war is one of the main reasons the stock market crashed today. In addition to the trade war, another factor that may have contributed to the crash is the growing concerns about a potential recession. A recession is when there is a sustained downturn in economic activity, typically leading to a stock market decline. Another cause was a combination of high unemployment and low consumer confidence. This caused a decrease in demand for goods and services, which led to a decline in stock prices. The effects of the stock market crash are still uncertain, but there is potential for widespread economic instability. For example, if businesses fail, this could lead to increased unemployment and further decreases in consumer confidence. In addition, the stock market crash could also lead to banks failing and a reduction in the availability of loans. In addition, the Federal Reserve's decision to raise interest rates also contributed to the crash. While it's still too early to say definitively whether or not a recession is on the horizon, the recent rise in unemployment claims and slowing economic growth has led to renewed fears about a potential downturn. As a result, today's stock market crash could be just the beginning of more troubles for the economy in the months ahead. How will this impact individual investors, businesses, and the overall economy? After weeks of volatile trading, the stock market crashed today, with the Dow Jones Industrial Average plunging more than 1,000 points. The sell-off was driven by fear of a potential recession and continuing trade tensions between the United States and China. While the exact impact of the crash is still uncertain, it is likely to have far-reaching consequences for individual investors, businesses, and the overall economy. While it is still too early to know the full extent of the damage, today's market crash will have far-reaching implications for everyone. For individual investors, the collision will likely result in significant losses. Many rely on their investment portfolios for retirement income, and a substantial drop in value can jeopardize their financial security. Businesses are also likely to be affected, as a sharp decline in stock prices can reduce consumer spending and increase business failures. In addition, the crash is expected to cause a contraction in the overall economy as businesses cut back on hiring and investment. What can be done to mitigate the damage and protect people's investments? While no one can predict the stock market's future with certainty, there are steps that investors can take to mitigate the damage in the event crash. The first of the most important things to do is to diversify one's portfolio and spread investments across different asset classes. This will help to protect against losses in any one area. The second is to keep a portion of assets in cash or cash equivalents, such as money market funds, which can be used to buy stocks and lower prices after a crash. The third important step is to have a long-term perspective. Even if the market crashes today, it will likely recover over time. As such, it is important not to panic and sell all of one's holdings. Instead, focus on building a well diversified portfolio that can weather storms over the long term. Finally, having an emergency fund to cover unexpected expenses can also mitigate the damage caused by a stock market crash. By taking these precautions, investors can help protect themselves from losses in the case of a stock market decline. What lessons can be learned from this event to help us prepare for future crashes? The current stock market crash has been a wake up call for many investors. For years, the stock market has been on a steady upward trend. We're making it easy to forget that steep declines are also possible. However, the recent sell off has served as a reminder that market correction can happen anytime. While it may be impossible to predict when the next crash will occur, there are some lessons that we can learn from this one that will help us prepare for future declines. First, it's essential to have a diversified portfolio. This means investing in various asset classes such as stocks, bonds, and cash. This will help protect your portfolio from losses in any particular sector. Second, it's crucial to have a long term investment horizon. This stock market correction may be painful in the short term, but if you're investing for retirement, you can afford to ride out the downturn. Finally, don't panic. Although it can be tempting to sell in a down market, this is often the worst thing you can do if you stick to your long term investment plan and remain calm during times of volatility. Don't forget to like and subscribe to the channel if you like this video. Is this a sign that the economy is headed for another recession? There isn't a simple answer to whether or not the stock market crash today is a sign that the economy is headed for another recession. However, there are a few factors to consider. First, the stock market is just one aspect of the economy and it doesn't always reflect the overall health of the economy. Second, even if the stock market is an accurate indicator of the economy, it's important to remember that a combination of factors often causes recessions. Hence, a single event like a stock market crash is unlikely to trigger a recession. Finally, it's worth noting that steps can be taken to prevent a recession, such as stimulating economic growth through government spending or keeping interest rates low. Ultimately, only time will tell whether or not the stock market crash today is a sign of things to come. The next few weeks and months will be crucial in determining the stock market's future. It is essential to stay informed and watch global economic indicators to understand how they may impact the stock market. As always, it is necessary to consult with a financial advisor if you have any questions or concerns about your portfolio. Thank you for watching. I hope you have learned something from this video. If you like this video, give us a like, subscribe to the channel, and comment down below. Thank you and goodbye.